Market Day report. What today here? A historic day with a drop that we have seen in our commodities and our outside markets here as well. We go to the board and check out the corn trade, holding together fairly well throughout the morning here. Check out the trade on the CME group right now as far as corn is concerned, and we see it still higher by 0.5 cent in that May, up 1/4 cent in the March contract. Want to go to Chicago? Todd Horwtiz standing by live from the CME group. Todd, you sent me an email, and rightfully so. You said, Mark, we need to talk about these markets when you talk to me here on Market Day Report. So take it away.
Well, Mark, I think we're seeing a lot of carnage, first of all, in the overall equity markets. Now, on the surface, we generally don't think about that really having a major effect on farmers and producers, but it does have an effect because it's creating more of a lesser demand for their product, number one. Number two, some of the selling you see on a day like today is actually farmers and producers who also have equity portfolios. Sometimes they have to make margin calls, sometimes they have to sell to create. So what you're seeing here is an overall carnage throughout all of the markets right now because of all the financial engineering that has been done by the Federal Reserve. It is creating a ripple effect through all of the markets, and this is how it plays out, and it's not going to get any better for a while. This is going to continue to be the story on a daily basis. The markets have switched over from a buy the dip mentality to sell every rally, and every time we get a rally, the sellers come in like crazy, but it really has a true ripple effect, causing obviously oil. Spot oil is going off today, which is the February oil, down almost at $26, down over $2 today. March oil is not down quite as much, but just under 28. But overall, you have to understand it as the ripple effect passes down, because we have more than just what we have. There's always going to be some selling or unintended selling that we didn't know what to expect, which I think that's causing a bigger problem. And as we see, what's down the most? Soybeans. Now, you can give me the news stories as why, but soybeans are the most expensive. So if somebody wants to sell something to get some money out of it, they're going to sell the soybeans first. Beans down 10 to 12 cents here. So is the crude oil leading the financial market, or is the financial market, is it kind of I guess a combination of why we've had the big sell-off, 500 points lower at one time. Now the Dow is coming back a couple hundred points from there. You know what, Mark? I got to tell you something. The story has been oil, but why isn't the story corn, wheat, or soybeans? Because they're down in percentage-wise. They're in just as much trouble. It's the overall commodity space that is getting slammed, because what really happens and what nobody talks about, it's not that oil's going down, big deal, oil's going down. But what it does, though, is it takes away jobs. So, for example, farmers and producers, the guys we're talking to right now, they're having trouble right now because they're not making enough money. They can't pay for all that stuff, which means if they do hire people, they have to watch their payroll because they're not making enough money. So it has the ripple effect that when you have deflation, it lowers the ability to supply the demand curve, because we don't have enough money to go out and buy. It creates an ugly mess. So although you might be happy with what you're paying at the gas pump, you're not going to be happy with the end result, which is not enough business and a much lower stock market. Hence, probably lower grain markets until something happens to create a panic to make them go higher. Yeah, okay. Rem, real quick before we leave, I was reading here, it says the investors are fleeing to the safety of government bond, U.S. I mean, from the outside looking in, when you're trillions of dollars in debt, why go to bonds? Just because it's just 1 or 2% and you can guarantee? Well, what you're buying, Mark, is you're buying what they call is the full faith and credit of the United States government. Now, we know that the government is a mess. We know that they're in debt up to their eyeballs. However, if they go out of business, that doesn't bode well for the rest of us. Yeah. So that's what the banks have been doing for the last 7 years, Mark. They've been borrowing at zero and giving it to the full faith and credit of the United States government. That's why there's been no lending, and that's what they've been doing with their money. They've been giving it to the full faith and credit of the United States government. But the government, it's not that big. I'll get back to it. Okay, go ahead. I'm sorry. Todd Horwtiz, live. Yeah, we'll continue that. Todd Horwtiz, as you see, live on the floor at the CME Group, where it's happening right behind him. We'll have him back in 1 minute. We'll talk about the livestock trade and more about the collapse in the markets today. Be right back in 1 minute.